Hi, my name is Senior Hannington, the Financial Reporting Online Tutor. In today's video, I'll talk about the concept of goodwill under IAS 38, Intangible Assets. Then I'll also talk about impairment of assets that is covered under IAS 36. On your screen, you have a question. Now this question is from Financial Reporting CPA, Paper 7, August 2023. Please, you can get that question paper. Mezzanine Confectionery Institute, MCI, is a confectionery entity that focuses on training individuals on how to make different pastries that are sold to customers through retail outlets owned by the institute all over central Uganda. MCI made the following transactions. MCI made the following transactions during the year ended 28th February 2022. On 1st March 2021, the current management of MCI acquired the confectionery business from relatives that had been running it as a family business. Remember, there is an acquisition, and whenever there is an acquisition, there is a possibility of coming up with what we call purchased goodwill. The assets of MCI were as listed below together with their values. We have intangible assets, plant, property and equipment, you have the inventory, you have receivables with their values, as you can see there. The intangible assets relate to intellectual property rights and does not include purchased goodwill. I have talked about purchased goodwill in the introduction of shillings 10.3 million that resulted from the acquisition. So MCI acquired the other confectionery business, and on that acquisition there is a result of purchased goodwill of 10.3 million. And they are telling us that this is not part of the intangible assets we see up there. So that is the first transaction. The first transaction is all about the acquisition of a confectionery business. They are giving us the assets of MCI, but these different assets we have exclude the purchased goodwill. During the year ended 28th February 2022, some of the most valuable staff of the institute, that is the MCI Institute, broke away to form a competing institute nearby, leading to a tremendous decline in the performance of MCI. A tremendous decline in the performance of MCI. That is an indicator of an impairment, as we are going to see. As a result, MCI's cash generating unit, comprising of all the institute's assets, was tested for impairment, and its recoverable amount was established to be shillings 567 million. Cash generating unit, impairment, recoverable amount. I'll explain all those terms. However, property, plant and equipment of MCI includes a property with a carrying amount of shillings 193 million, whose net realizable value was the same as the carrying amount. None of the receivables is doubtful, and then any RV, that is net realizable value of inventory, is greater than the carrying amount. Management of MCI had been referred to as a level 2 student of CPA to assist them understand the events surrounding their cash generating unit. Required, in accordance with IAS 38 Intangible Assets and IAS 36 Impairment of Assets, explain to the management of MCI the difference between internally generated goodwill and purchased goodwill. Then part B, assess the impairment loss of the individual assets in the CGU and show how these assets will appear on the statement of financial position as at 28th February 2022. I'll start with part A of the question. In accordance with IAS 38 Intangible Assets and IAS 36 Impairment of Assets, explain to the management of MCI the difference between internally generated goodwill and the purchased goodwill. Now, these are two concepts related to intangible assets that are defined differently in IAS 38, intangible assets. When we talk about internally generated goodwill, this refers to that goodwill that a company develops through its own activities, such as a strong brand reputation, customer relationships, or the employee skills. This type of goodwill is not recognized as an intangible asset under IAS 38. Why? Because it is considered difficult to measure reliably and separate from the overall value of the business. Remember, an intangible asset has to be identifiable. But when you look at the internally generated goodwill, we cannot easily identify it from the business. Therefore, it's not recognized as an intangible asset as per IAS 38. Purchased goodwill. Now, purchased goodwill refers to the excess of the purchase price of a business over the fair value of its identifiable net assets at the time of acquisition. So that excess of the purchase price paid over the fair value of the identifiable net assets at the time of acquisition is what we refer to as purchased goodwill. Now, this purchased goodwill is recognized as an intangible asset under IAS 38 if a certain criteria are met, such as it being separable, arising from contractual or legal rights, or capable of being reliably measured. So that is it for the internally generated goodwill and the purchased goodwill. I've told you internally generated goodwill is not recognized as an intangible asset under IAS 38 because of the difficulty in reliably measuring its value, while purchased goodwill is recognized as an intangible asset if the specific criteria are met at the time of acquisition. We move to part B of this question. You don't need to write a lot. Just explain what internally generated goodwill is, purchased goodwill, then you go on to the next part. Assess the impairment loss of the individual assets in the CGU and show how these assets will appear on the statement of financial position as at 28th February 2022. 15 marks. Now, according to IAS 36, impairment of assets, an asset is considered to be impaired if its carrying amount exceeds its recoverable amount. The recoverable amount of an asset, that is the higher of the fair value less cost to sell and the value in use. When I talk about value in use, here I'm referring to the present value of the future cash flows which will be generated by the asset. Sometimes you find that it is not possible to attribute cash flows to an individual asset. So when it comes to impairment reviews, what you have to do, if it is not possible to attribute cash flows to an individual asset, or if it's not possible to come up with a recoverable amount of an individual asset, an impairment review has to be carried out at the level of a cash generating unit to which that asset belongs. According to the standard IAS 36, a cash generating unit is a group of assets which together generate cash flows For instance, a production unit in a factory could be treated as a cash generating unit, and any impairment identified will be apportioned between the assets of the CGU. Now, when we try to look at the case of MCI, we have a CGU in this case. But this CGU consists of these different assets: intangible assets, plant, property and equipment, inventory, receivables, as well as the purchased goodwill. So what you have to do in this particular scenario, first find out the total carrying amount of the assets of MCI. Find out their carrying amount. Now, because they cannot determine the recoverable amount of each individual asset, they are giving us the recoverable amount of the CGU as a whole after testing it for impairment. So what you have to do first is come up with a total value of the CGU as a whole. Then compare this carrying amount with the recoverable amount which has been given to see if the CGU is impaired or not. If it's impaired, then we shall see what next. Remember, a CGU is considered to be impaired if its carrying amount exceeds its recoverable amount. Let us come up with the carrying amount of the CGU. Carrying amount of this CGU as per the information given. You have intangible assets, property, plant and equipment, inventory, as well as receivables. So we have the intangible assets, as you can see. We have the intangible assets. Now these intangible assets, their carrying amount is how much? We need to look at the carrying amount of these intangible assets. Their carrying amount has been given as 21 millions. Then you have the PPE. The PPE, the carrying value is 462. You have the inventory, whose carrying value is 167 millions. Then you have the receivables, whose carrying value is 64,700. That's what we have. But of course, you have to bring in the purchased goodwill, the goodwill. We have to bring in the purchased goodwill of 10.3 million. That is 10,300. So let us see the total carrying amount of this CGU. When you sum up, we get 725 millions. Now that is the carrying amount of the CGU. That is the total carrying amount of this CGU. But remember, we have also been given the impairment loss. Sorry, the recoverable amount. The recoverable amount of this CGU equals to how much? Let's try to find out. The recoverable amount of the CGU is 567 million. So you have the carrying amount, which is 725 millions, and then the recoverable amount is 567 millions. Of course, when you try to look at this, you will see that the CGU is impaired. The CGU is impaired. Why? Because the carrying amount is greater than the recoverable amount. The CGU is impaired because its carrying amount exceeds the recoverable amount. How much is the impairment loss? The impairment loss equals to how much? Let us try to get a difference. That is the impairment loss. So we get the 725 millions minus 567 millions. The impairment loss is 158 millions. That is our impairment loss. 158 millions. That's the impairment loss. Now this impairment loss has to be allocated. The impairment loss has to be allocated. How do we allocate this impairment loss? So the impairment loss will be allocated as follows. Will be allocated as follows. So what I'll do, I have the carrying amount. This is before impairment. Then I have the impairment allocated. The impairment loss allocated. And then the recoverable amount. So the carrying amount after impairment. Remember, we are dealing with a CGU. So I will list the assets in the CGU as we have them with their carrying amounts before impairment. That is intangible assets, PPE, and so on. So we have our goodwill with 10,300. You have the intangible assets. The intangible assets have a value of how much? Let's try to check. That is 21,000. Then you have PPE. With the PPE, that is 462,000. Then you have the inventory. our inventory has a carrying amount of how much? 167,000. Then you have the trade receivables. Trade receivables have a carrying amount of 64,700. So that is your CGU with its carrying amount, with the carrying amount of the assets before any impairment loss. And we have seen that the total carrying amount of the CGU as a whole is 725 millions. 725 millions. Now, the carrying amount after impairment, or what we shall call the recoverable amount, because now after allocating the impairment loss, the total recoverable amount or the total valuation of this CGU should be equal to their recoverable amount of 567. Remember, when the assets are impaired, then they are going to be carried at their recoverable amount. So being that the CGU is impaired, after allocating the impairment loss, we are going to carry it to its at its recoverable amount of 567 million. In other words, we reduce its carrying amount by the impairment loss of 158 millions. Now, this is our, we want to allocate the impairment loss of 158. The first thing you have to do when it comes to allocating this impairment loss, this is what I have to allocate. 158 millions. According to the standard, the initial write-offs are, we have to write off our goodwill to 0. That's according to IAS 36. So I have to come and reduce the value of goodwill to 0. So I have to first allocate the impairment loss to goodwill. So 10,300. We write off the value of goodwill to 0. So meaning that the carrying amount after impairment, when it comes to goodwill, its value will be 0 or dash. There will be nothing when it comes to the goodwill. So you have the intangible assets, you have the PPE, the inventories, as well as the what? As well as the receivables. When you look at the question, none of the receivables is doubtful, and the NRV of inventory is greater than the carrying amount, meaning that there is no any impairment for receivables as well as inventories. They are already stated at the net realizable values. So there is no impairment for the receivables and what? And the inventory. So inventory, no impairment. So their carrying amount will equal to their carrying amount before impairment will still equal to the carrying amount after impairment. The same with the trade receivables, no impairment. Still they will be current at 64,700. Meaning that you have the intangibles as well as the PPE. You have the intangibles as well as the PPE. We have to find out what is the remaining impairment loss. So we have remaining impairment loss equals we have 158 millions minus the value of goodwill. The value of goodwill, that was 10,300 because the impairment loss allocated to goodwill is 10,300. So the remaining impairment loss is how much? Let's try to find out. 158 minus 10,300. This gives us 1 million. This gives us 147 millions 700,000 as the remaining impairment loss. This is to be allocated. This is allocated between the PPE and the intangible assets. And the intangible assets as follows. So we have the PPE as well as the intangible assets. But one thing you need to know, when you look at the question, you will see that part of the PPE were not impaired. However, PPE of MCI includes a property with a carrying amount of 193 million, whose net realizable value was the same as the carrying what? As the carrying amount. So that PPE did not impair. So when you're allocating the impairment loss, you have to exclude that. Okay? So my PPE is 462,000. 462,000. But I'll remove the 193. I remove the 193. I remove the 193 because the 193 million that relates to a PPE whose carrying amount was the same as the net realizable value. So that part of the PPE is not impaired. So meaning that the remaining PPE that is impaired is 269. The intangible assets, they are valued at 21,000. But remember, we have an impairment loss of 147,700,000, which we have to do at which we have to allocate. Which we have to allocate to these other assets. Now you allocate that on a pro rata basis. In other words, on the basis of their carrying values. So when you add this, you get the carrying amount of the two assets. You get the carrying amount of the two assets. So that is 269,000 plus 21,000, which is 290,000. So the remaining impairment loss is to be allocated to the PPE and the intangible what? And the intangible assets. The allocation. The allocation will be PPE. So what we do, I'll get the 269 over 290 times what I want to allocate, that is 147,700,000. Then the intangible assets, that is 21 over 290 times 147, 700,000, the impairment loss which we are allocating. 269 by 290. So for the PPE, we get how much? For the PPE, we get 137 004 483 if you carry all the values. Then for the intangible assets, you get 10 695 517. So those are the impairment losses to be allocated to these assets. Those are the impairment losses to be allocated to the assets. So let me take this up here. So for the PPE, the impairment is 137 004, of course 0.483, because the 3 zeros are up. We are getting that from the working. Then for the intangible assets, the impairment allocated is 106 95 517. So you also bring that here. So this is 10 6 95 .517. This is also from my working. Therefore, the value of the intangible assets after the allocation of the impairment loss, your intangible assets will be valued at 10,304.483. Then for the PPE, to get the carrying amount after impairment, that is 462,000 minus 137,004.483. And this gives you 324,995.517. Just to confirm, you can add up the impairment loss and see if it adds to 158 millions, 10,300 plus 1069517, then plus 137,004,483. Yeah, it gives you 180 millions. And of course, when you still add the values in the last column, 64,700 plus 167,000 plus 324,995.517 plus 10304.483, you get 567 millions. So that's how we allocate the impairment loss. Of course, as per the question, you've also been required to and show how these assets will appear on the statement of financial position as at 28th February 2022. So here you have to just come up with the extract of the statement of financial position. Extract. So you say MCI's extract of the statement of financial position. We have your non-current assets. Under non-current assets, of course, we have the PPE. We have the PPE. The PPE you bring their carrying amount after impairment. We have how much is that carrying amount of the PPE after impairment? That is 324995. 324955 point. Then under still non-current assets, we have the goodwill purchase, but of course I will just put a 0. Then you have other intangible assets. Other than the purchased goodwill, their value after impairment is how much? That is 10304. 10304 .44 .48 .483. Those are the non-current assets, but of course you also have current assets where you have to show the receivables at their carrying amount as before, because the receivables didn't impair. That is 64,700. Then you also show the inventories. Inventories didn't impair. Their carrying amount is 167 million. So that will be the extract of the statement of financial position showing the values of these assets after the impairment. So that is August 2023, question 4. We have seen what purchased goodwill is, as well as what internally generated goodwill is and their treatment. Then we have also seen the concept of the CGU and how you can allocate CGU, how you can allocate the impairment loss to the assets in the CGU. Thank you for listening. Thank you for watching. I remain your tutor, Senior Huntington. Bye-bye.